Hello everybody. We're going to go through some of the currency pairs, typically the Asian ones, as you know, that's the one I like to trade personally. But first, we'll show you how my watch list is set out. So first of all, we start off with, at the top, we've got currency indexes. So it tells me the strength of the dollar, yen, Australian dollar. Then next we got the interest rates of the country of the United States, Japan and Australia. We've also got the government yield bonds, US and Japanese. We've also got the stock index, the equities market. I want to have a look at the equities market when trading for, even though, you know, it's stocks and not currency, I still would like to look at that to see the overall sentiment of, you know, investors around the world. We've got commodities because, you know, commodities can, you know, have correlations with my currency pairs that I trade here. And the three currency pairs I do like to trade is the US yen, AU, and Aud Jpy. So if we start with the indexes, well, what they mean is, you know, it's, so if you get the US currency index, it shows you the strength of the US dollar in comparison to 6 other currencies, right? So we can look at the Japanese yen. As you can see, it's becoming weakening against 6 other currencies. And when we look at the Australian dollar, recently it's been getting stronger compared to the other currency pairs, and we can see that in other, you know, currencies. Okay, so yes, this shows the strength compared to others. We've also got interest rates. And why do I have interest rates? Well, with interest rates, it can also, you know, be helpful to know where the currency might be going, as like higher interest rates is typically quite good for a currency, as if you were an investor, where would you want to put your money? Somewhere which has higher yields than others. So if, let's say, United States is, well, willing to pay you at least 1%, you would probably choose that over Japan, because at the moment they're paying you negative interest rates, which means you have to pay them money to put your money in their country, essentially. So interest rates, the higher they are, the better they are, because they provide better return for, you know, people putting their money there. We've also got government yields, right? Why do I have that? Because, well, it shows a lot about, well, it goes hand in hand with equities markets. So let's have a look here. So recently we've had well, it was having a bit of a bearish momentum downwards, but recently we've had quite the push upwards, and in comparison with yields, we've had quite the push downwards after a long one. So if we, you know, compare it with the stock market, well, the S&P 500, you can see that on screen it's been going up recently and it's going down, and beforehand this, you know, was going down and this was going up. So they do have quite an inverse relationship. But what does this mean, you may ask? So the reason why I have it, so I can, it's a good indication of risk appetite for investors, right? So if it's going down, yields, government bond yields, well, they show the performance of bonds. If bonds are, you know, performing well, and the stock market isn't performing well, as you can see here, it means that people are more, well, having less of a risk-taking approach. So they're going to invest their money in something that is safer, because, you know, equities can be quite risky compared to bonds. So it just shows what people's risk appetite is, and that helps a lot, because when you're trading currencies and commodities, it can tell you, like, as you can see, oil is a commodity, and commodities are seen as risky investments. So as you can see, right, so because it's going down, the yield is going down. It's showing, and the stock market, the equities, is going up recently. It is showing that the people, investors in general, are having more risk appetite. So we're in a risk-on environment because people are willing to take more risks, and because of that, commodities is quite a risky investment. So as you can see from here, we have been range bound between $115 per barrel to $100 per barrel for quite a while, since March 2022. But recently it broke above $115 per barrel because, you know, people are taking more risks. So they're like, you know what, we'll invest in oil because they feel like taking risks, which you can see people are deciding to take more risks as the equities market's going up. And you know, seeing commodities also rise is good confirmation, because when it comes to currency, you've got risk applied to currency. Like, because I like to trade Australian dollar, they are seen quite a risk on currency. They are a risky currency, whereas United States dollars, they are a risk off. It's a safe haven, right? People go to the dollar as a safe haven because it's proven. And when we look here, we've got, as you can see, right? Let me show you. So it's been going down because the Australian dollar is a risk-on currency, whereas Japanese yen is, you know, a safe haven, a risk-off. So as you can see, when we look at the yield, right, it's going up. People are not risk taking. So what do? If they're not risk taking, it goes down, because, you know, Japanese yen is getting stronger, Australian dollar is weakening because people are taking less risks. But recently, as you can see, we're in a risk on, because, you know, risk on commodities like oil's going up. So that means, as well as Australian dollar is also going up recently, after quite a bit of a risk off sentiment in the market because of the uncertainties that we were having. So if you look at oil first, it traded above $100 a barrel since, you know, the Ukraine invasion by Russia happened. It exploded all the way up to $130 per hour. Then came all the way down to $100 per barrel, where you can see there's quite strong support down here. It has rejected this area multiple times, and it's just been range bound from between 100 and 115. But as you can see recently, it just broke above 115, as you can see with this upward momentum right here. And since it broke above, I can see the price of oil carrying on. And where do I see it carrying on? Another extra $15 per hour, so 130. This is where I think price will try to get to in the next maybe week or 2 weeks or so. But we just broke above this line, and we are looking for it to retrace. Like, as this $115 per barrel zone area around here, you can see by my markings on the chart, right, it was also acting as resistance for quite a while, here, here, and here. But now it broke above, we can expect it to come down again, come all the way down to this zone, to retest it essentially, see if it's a valid support, as it was previously used as resistance, and then beforehand it's going to, you know, hopefully we're going to see it push all the way down, well, up to our target of 130. When we move down to the 4-hour time frame, shall we see, right? We can see quite the momentum downwards, and potentially, right, if we use our Fibonacci retracement, we can see that the 115 is off 50% retracement, and that is where, if you were looking to buy, would be a great area, great price to buy at. And then we could see it potentially rising all the way up from 115 to 130. As you know, we are in a risk-on environment. Commodities like oil will be seen to be pushed higher and higher as people are taking more risks. When we look at, we're going to look at AUD JPY, and as you see, it is a risk-on because Australian dollar is going up, but also, if you see the price of, you know, this pair moving up, it means that also the Japanese yen is weakening. And why would we want to trade it? Because again, why would we want to trade it upwards? Because the Australian dollar is a risk-on environment. People taking, you know, going to put their money in Australia. And also, people are not having as much faith in the yen. Why so? Because, well, since oil is now pushing up higher, and since Japan is a massive importer of oil, what that means is that Japan is going to have to pay more money to get their oil because the prices are now higher, thus devaluing their economy, weakening the currency because they have to pay extra for oil. And that is why AUD JPY would be the perfect, you know, buying opportunity at this moment. As you can see, you had this huge push upwards, just like oil did, just from down here up. And yeah, now the price is sitting around 92.5. And we could, again, see a retracement down to the daily zone, down here by, you know, 91, before we can see it pushing up to this high of the daily. Also, we can see that it has broken the downtrend, right? And it's got quite a lot of momentum pushing upwards, so we can, you know, expect to see it push even higher. But there is also a possibility of a retracement, and we can expect a retracement. But where to? Maybe down to this daily zone, as we had a lot of resistance before we broke out. So we could see, potentially expect to see price coming down here to retest this previous resistance, which is now turned to support, before we head up. If we look at the the USD JPY, we've had, well, another thing actually, the government yield and USD JPY are quite closely correlated. So if it's going up, it's going up. If this is going down, it's going down, as you can see. It looks quite similar. But right here, we've had quite the downtrend for quite a while, right? And recently it just broke above it, and it broke above it today actually, and in about an hour and 40 minutes we're going to see the candlestick close, and if it closes above it, we can expect that price would carry trading higher than this zone as it chooses to close above it. I would find probably most of my best entries for a trade somewhere above this price point, about 127.5. If we go to the 4 hour, we've got, as you can see, market structure showing higher highs, higher lows, higher highs, higher lows, higher highs, right? So you can see price wants to push up. And on the 4-hour, right, today we see price push up higher. It came down, retested the daily zone that I showed you, which was quite significant. Retested it and rejected it, as you can see with this wick and a close above here and a massive momentum of bullish movement to the upside. So if I was to take a trade, I would be looking at a potential trade opportunity around this area, 128.2, before getting into a buy anytime soon. We've got the retest, and it showed that it rejected the retest, so we can expect it to carry on even further up to this zone up here, because price isn't going to just stop or reverse randomly in the middle of nowhere. It's got to reach a significant zone first, and then yeah, so if I was to trade this, I would wait for a retracement all the way down to a potential, fib retracement. If I just mark one on, possibly down to the 61.8 extension. As you can see, there is also a bit of a support bout down here, which I could possibly be taking a trade, like so. Have one down here and target all the way up to the next gold zone. Like we said, we can expect price, since it broke above this zone, we can expect a price carrying on to the next. And then once it reaches this zone, we can wait and see what price wants to do, whether it goes down or it breaks above again. But we don't know until it reaches there, essentially. But since it broke above, price is going to carry on, because it's not going to stop in the middle of nowhere and just reverse. As you can see, I previously did take a trade from when price was rejecting this daily zone and didn't want to close above. Tried multiple times but always closed below it. And then, as you can see, I took a trade on the retracement, as we had a nice evening star pattern which showed that there is going to be bearish momentum downwards, and we took a nice 4-to-1 trade from, like I said. So if price moves down, it's going to carry on to the next zone, and then we got to wait till see what happens. What other pairs? I don't think I've had a look at AUD USD at the moment. So again, looking at the Australian dollar, it is having a bullish momentum at the moment because we're taking more of a risk-on approach, and the USD is a safe haven. So the USD is weakening at the moment. So we can see the price moving up, broke above this quite key support. If the as you can see previously, the 0.7 is a very, very key level, and it's now trading above it, which shows that price is not accepting below it. So we're going to push up further, and we've got, again, higher highs, higher lows, higher highs. And then, with market structure, we've got support on the highs, and we can expect to see a retracement of some sort down to this daily support as we broke above, and we're looking for a retracement. And if we put a Fibonacci on it, you can see the 50% retracement is on this daily support, which is good confluence in taking a trade. So and it's on a perfect number as well. It's a key psychological level, 0.712. It's a good level to potentially enter a trade in. I wouldn't want to enter a trade up here, nor just anywhere until it reaches here. We're going to wait till the trade comes down and then shows us some sort of rejection before we get into the trade. That is all what I'm looking for. Gold at the moment, if we look at the daily time frame, we've had a small retracement up in a overall bearish movement. It has now we've had a candle that pushes down below the very significant 1,850 mark, and if price closes below, which it will close in an hour and 35 minutes, if it closes below it, I can expect it to carry on the overall downwards momentum as we're seeing in gold right now, as this is a very key level. As it has as it does close below, we can expect to see maybe again entry on 1850. It might have a small, retrace and then carry on further down, which may be a good trade, and we can see it continue all the way down to this gold zone, the 1780 spot. As you can see, it has been rejected here before, which had created a massive momentum upwards. And yeah, we could potentially catch the trade all the way down here, which is about 5,900 pips, which is a lot of pips and a lot of money to be made in gold. So yeah, that's the rundown of what I see in the market at the moment. So just a quick overview. Looking for the US dollar and yen to push higher to this zone on my 38 extension, which would be a target if price retraced all the way down to the 4-hour support, which would be quite cool. And the AUD USD, again, very key level, probably the best level of probability of entering a trade long onto this trade, as it will most likely carry on upwards to the next zone of importance. And similarly with Aud Jpy, we've had, after a few tries to break above it, it finally breaks above, and we're going to expect it to have a retracement, but again carry on up to this daily zone, and maybe if it's strong enough it might carry on to this zone up here, but we can't guarantee that yet, so we're going to have to wait until price reaches here to see what price wants to do again. So at the moment with this one, we're looking for a retracement that we can enter on and hopefully get a buy, so we can trade it all the way up to this daily zone here. As you can see, I've marked my 1-hour support and resistance as key levels here, which as you can see has been tested many times here before, which would also be great places to enter a buy trade potentially if we're looking short term. But currently at the moment I am looking at AUD USD, looking to buy and trade it all the way up here. But that is my take on the current market at the moment. This is dated 31st of May, so when this video gets out it's probably going to be the 1st of June. And yeah, and we can see what price wants to do, and I can update you guys from where I think price is going to reach. With oil, we could see a retracement down here and then potentially hitting $130. I'll update you guys when this happens. And with gold, I can see it so easily going down to the 1780 mark, because it's with quite a bearish structure, closing below a very significant level. We can see that. US dollar, we can see it's going up. AUD USD, I'm going to trade it upwards, and especially here I can see it moving up to 94. But we are expecting at least a retracement somewhere before it gets there. We don't know what price is going to do, but I believe price is going to reach all the way to 94 no matter what it does. It might retrace a bit, might just go all the way straight there, or it might consolidate for a bit and then get straight there, but we'll have to see, and I can update you guys some point. All right, thank you very much.